Broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to our webinar this morning. I'm Jim Guinan and our topic this morning is Annuities versus CDs, and I will be having this presentation here shortly. I want to thank you for taking the time out to listen in today, and we will have this recorded. So I want to let you know that if you, for some reason, you need to leave the presentation or just don't get through all of it, we will have it recorded and it'll be available for you later on today. So with that, I do want to get started. Again, our topic is probably about a 30-minute presentation or so. So with that, let's get started. All right, I want to talk to you about a few ways this morning where you can take advantage of free money, more or less, here at Insurance Agency Marketing. And this will be through our business builders. We're going to talk about 3 different business builders. First of all is Referred Producer Program, which has been ongoing here at our brokerage for a number of years. And it's our way of saying thank you for putting us in touch with other individuals that are working in the same business, Medicare life, fixed annuities. So if you refer an agent to us here, we will certainly get you a bonus for them when they contract, and as a ongoing override, so to speak, on business they write. As you can see, this is unlimited. We don't limit you to one referral a year where you would get this. It would be ongoing, and so what a great way to earn a little extra, and also it helps us as an organization save money and work with more quality producers. Our marketing reimbursement program is our way of also helping with your business expenses. So if you have been writing with us for a little while, you will probably know about this program, but basically for every piece of business you write, whether it's indexed, annuity, single premium life, target life, there's a conversion of dollars that get thrown into the account, and then for you to use for a deferral of business expenses, or a reimbursement, I should say. So our way of kind of helping you with your business practice, your costs that you're running into, and you all have that. Okay, and then our new producer bonus is again continuing to be a growing program for us for agents that are writing in their first 180 days with us here at Insurance Agency Marketing. You can see the different levels. So at the end of 6 months, you would look at whatever threshold level you're at and see what rewards you would take advantage of. We'd be glad to talk with you about this further. What a great way to start writing some business, get something back from your IMO, and again, some of these are related directly to your business. Some might just be a reward. So if you decide to take cash for those, we're fine with that too. Okay, our back office support here is very good, I think, here at our brokerage. What our goal is to do is to help business flow and process quickly. And in the meantime, what our job is to do this for you so that you save time in the things that can eat up your time. So following up on cases that you've written, getting illustrations and quotes from us for life and annuity. Your contracting process, we're always constantly looking for ways to streamline that. And we now have a new vendor for that. So we find that it's more efficient to use that. So when you want to add a carrier, for example, you don't have to fill something out every time from a contracting point of view. If you need a quote, you can call us. Case managers probably don't necessarily work with that as much as the marketers do. If you need a life or annuity quote, you want to talk with one of us, we're happy to do that again so that you don't have to take the time to be doing that and you can continue to do what makes money for you, which is sell. Our creative department is a continuing growing department here at IAMS. They continue to work on ways to help you with things like branding your business, with your website, whether it be developing a website or maybe improving on one you have, maybe kind of pulling a brand all together, making things consistent in the way that you market to your prospects and recruit. So if you need help with any of these areas, don't hesitate to call Jacob and Sean in the creative department, and they'll be glad to visit with you about what they can do and what kind of costs may be involved with doing that. Our website is www.iamsinc.com. That's IAMSINC.com. If you've not been to our website or it's been a while, we have updated it here. I would say in the last, inside the last year. We use this a lot as employees for things like our resource library. I use it for helping me with products because we work with so many carriers. It's kind of hard to sort out, what carrier writes in certain states to what ages and what products are available or not. So it really helps us a lot, and it's accessible to you too for things like income rider quotes. And also, our current annuity rate book is posted on the website. So this contains about 40 pages of multi-year rates, our income riders, best-selling index products by carrier. And so it's a great resource that we use. But even further than that is the tools that the website offers. And if you need term quotes, or if you're looking for an agent resource library, it's one of the best that I've seen. Okay, IAMS Wealth Management is our RIA division here at Insurance Agency Marketing. It's a separate division, and we've worked with this area now for almost 3 years. It's our RIA, and so if you're looking at ways to increase your revenue, retain clients better, or just have better relationships with them, certainly the Series 65 and the advisory business might be something that you'd want to take advantage of. So I'm going to launch a poll question here. And if you'd like to get more information about what's involved in being an investment advisor rep, and what's involved as far as responsibility, your fiduciary responsibility, the costs involved and things like that. If you'd like to get more information on that, certainly respond to this question, and then one of the team in the wealth management area will reach out to you. Maybe they just want to send you some information, maybe have a conversation about what's involved in that. So again, a very big growth area as part of our overall plan here, has done a lot of business and growth in the last 3 years. So I don't think that's gonna slow down anytime soon. Okay, I do appreciate your responses to that. Moving on, I want to talk about our Life and Annuity Academy. Now, we just completed our last academy, and that was in September for 2019. But we will have future academies. We don't have an exact date set, but our next one most likely will be in early spring. And if you're an agent currently writing fixed annuity or life insurance business now and would like to know how you can qualify for this 2-day, it's actually 2.5-day all expense paid training, we'd be glad to visit with you further. As you can see, some of the topics, this program is updated every time to keep up with what's new, either with the carrier or what's going on as far as prospecting tools. So if you're interested in that, we are accepting registrations pretty much year-round, but know that anything that you would register for now would be for next spring. So if you'd like to get more information about our Life and Annuity Academies, we've been conducting these now for almost a decade. And this is a way for you to learn about how you can grow your business, how you can take your business to another level. And we've seen proven success that these programs, based on the topic that we provide, the expertise of those people that we invite, as far as presenters, and the ability to talk with people that are currently selling product through us and utilizing seminar systems, for example. Again, you don't have to turn into a seminar agent, but we would make that available to you to give you some information about how it might work for you. So again, if you're interested in that, please answer yes. And then what we'll do is after the webinar, you'll get an email with more information. And again, if you have any questions further, you can certainly ask me or any of the other annuity or life marketers here at IAMS. Okay, and on the screen here, you'll see that our marketing summit, the one that we just held, was finished up in August. That was a qualification period of a year and a half that just finished up, and then we had the summit. It was our most well-attended program at the Ritz-Carlton in Naples, Florida. The new one for the next period of time has not been announced yet, but we will continue to offer that program. It's both a social and educational event, and we look forward to bringing that to you soon, as far as announcing where that is and what type of business that we would be looking at in order for you to attend the program. Okay, so let's talk now. Let's get to the presentation material this morning, and that is visiting about annuities versus certificates of deposit. Okay, so when we talk about these two vehicles, investment, or I shouldn't say investment, but savings vehicles, both of them have better rates than just a regular bank account. All right, so a certificate of deposit is a time certificate that is to earn better than a money market, a savings, or a checking ever could. And annuities, of course, offer also that, but are issued through life insurance companies. But that's kind of the goal of both of them. They are some similar in some ways and different in most. But once we review these a little bit, you'll probably notice here that the annuities have advantages for certain consumers, and of course their situation needs to be taken into account. So it would be unfair to say that CDs are never a good place to go with some savings, and that annuities always should be purchased and things like that. So I don't want to make those kind of statements. They are different. They each have their own purpose, but oftentimes the annuity can be a substitute for what's being accomplished in the certificate of deposit. So we're going to talk about some key areas this morning. One is accumulation, one is benefits of tax deferral, and the other is accessibility. Okay, so let's talk about accumulation here. First of all, CDs are pretty much an accumulation vehicle. All right, the money is deposited. Rarely is money withdrawn from that, because if there is, there's a penalty, and that is usually the goal of it. However, the goal of it is for shorter term. Okay, so most people utilize a certificate as a place to park money for a short period of time. Oftentimes, it may stay there for longer. Okay, so they can be issued for as short a period of time as 1 month to several years, and of course, they are issued by banks and credit unions only. CDs returns are really based on the maturity. So the shorter term, the lower the rate, generally. And annuities, again, are also more for accumulation. Fixed annuities are issued by life insurance companies. They are generally deposited into for longer term growth. There are income options with those, but many of the products being sold today are purely simply a retirement vehicle to continue to grow on a tax deferred basis. So let's then go to tax deferral. All right. Well, certificates are not tax deferred vehicles unless, of course, it's deposited as an IRA. So we're going to just say right now, if the CD is registered as an IRA, yes, it is tax deferred. But for our purposes this morning, we're going to talk about non-qualified certificates. So the money is not tax deferred in any way, whether you receive the income, the interest income from a certificate, or you let it compound. Either way, you still pay taxes on that every year. With an annuity, by design, it's tax deferred. Can you receive income from that? Yes. Would it be taxable? Yes. So again, there are exceptions or there are variations here, but an annuity by design is a product that automatically reinvests and grows tax deferred. A certificate does not. Okay, and then let's talk about accessibility. Certificates, although issued many times for shorter durations, several months to 6 months, what have you, which in a way is accessible, but readily accessible to withdraw from, they are not. Annuities, even though they are for longer term retirement accounts, they do have access. It is either anywhere from interest only withdrawals that can be received within 10 days to 2 weeks, or it could be up to 10% of the account value. Again, those withdrawals can be accessed within a little over a week on the contract. So much to the difference, they are developed for long term, but they do have cash accessibility. Let's do a kind of a side by side here on different features and benefits of annuities versus a certificate. And let's talk about loss protection. Well, annuities are backed by the insurance company that issues them with no limitations to amount or styling. A certificate, since it is issued by a bank or credit union, they are insured by the FDIC up to $250,000 per account per institution. So they do have an insurance, a direct insurance on those deposits. Annuities, well, they're not backed by the FDIC because they're not a bank instrument. Again, they're backed by the insurance company and the surplus that has to be provided for every deposit. When we talk about withdrawal charges, well, as I already mentioned, we talked about how liquid the certificates are and the fact that they're not issued for long term. But they do have withdrawal penalties, which acts like a surrender charge. So if you had purchased a 6-month certificate, for example, and you wanted to go in and receive some dollars from that after 3 months, you'd have to break in the certificate and you'd have to pay a penalty of interest. Okay, so in the environment we're in, where the interest rates are lower, the penalties aren't really that extreme, but you still would lose some dollars by doing that. With an annuity, again, they're a longer term product. There's a defined surrender schedule. Again, you decide you want to compromise that and take out more than what's available penalty free and walk away from these contracts. Every annuity has a surrender schedule. And so whether it's a 5-year annuity or a 10-year product, you're going to have a surrender schedule that if you compromise, decide you want to exit, you will be penalized. We talk about access. Kind of touched on that a little bit before when we were talking about cash accessibility. CDs do have accessibility in shorter time frames because they can be issued in shorter time frames, but there are no um, penalty-free withdrawals on the contract. Annuities, they do offer contracts with penalty-free as high as 10. You can find in the industry 15%, but more commonly up to 10%, and that can be used for any reason at all. You can access that without explanation. However, since they are retirement vehicles, anything taken out of these prior to age 59 and a half will have may have a 10% IRS penalty. So that's something else to be aware of when you're helping clients with accessibility. A couple other areas or comparisons here are effects on Social Security benefits. A CD interest is counted toward taxation on Social Security benefits the year it's earned. That could lead to higher taxes on monthly benefits. Interest on annuities is deferred until the payment begins. So any interest that's earned on a contract that's not taken out, that's allowed to defer, doesn't count towards any tax liability towards Social Security. And then a big one here would be taxation. Everybody always wants to talk about taxation. So, and rightly so, when we're talking about the growth of these products. So a CD interest is reported and taxed in the year it is earned, whether the owner receives any money or reinvests it. Either way. Again, we're not talking about IRAs. That's different. It'd be non-qualified money. On annuities, again, kind of reiterating our topic somewhat. They are tax deferred. Interest income is not reported or taxed until it's withdrawn, and hopefully the goal is that at that point the clients are in a lower tax bracket due to retirement. So again, by design, by nature, there is no taxation on annuities. That money is automatically, the gains are automatically reinvested back into the annuity itself. So here's an overview. I think that might also help a little further. All right, so let's talk about the annuity and CD from a couple different additional aspects. So when we talk about market risk and price fluctuations, are these instruments free from that? Well, yes, both of them are. Interest earnings are free from current taxation with the annuity, by nature, tax deferred. Certificate deposit, no. There is taxation on the earnings. Is it reinvested with no current taxation? Again, yes with the annuity, not with the certificate. And then the tax liability, we already touched on that as it relates to Social Security. Going on a little further, are they liquid? Well, annuities do have liquidity provisions, or most of them do have a liquidity provision, I should say. A certificate, by nature of its short term, by its short term that can be chosen, yes, it is liquid. Are they flexible? And by this they mean flexible premium. An annuity, many of them are flex, and certificates, no. So you can't add additional dollars to a certificate of deposit. You would just simply purchase a new one. Penalty-free withdrawals, yes, with the annuity, not with the certificate. Are they free from probate? Again, another selling point for fixed products or any annuity out there is that, yes, they are free from probate. Certificates are not. One further note on that, if you name a beneficiary on an annuity contract, it is free from probate. If you put down or if the client requests their estate, that is not the case anymore. Taxation on withdrawals, there is no tax penalty for a certificate deposit. there is a penalty if withdrawn, and I already touched on that prior to age 59 and a half. And then how are they secured? Again, what's the backing? We talked about that prior. FDIC on the certificates, full faith and credit of the insurance company, and by state regulations, which is your state guarantee fund for the annuity. Okay, so here's an additional information, because again, all of those things are great to talk about, but you might not really have that in a way that you can present that to someone or show that to them. So here's a way to show someone how to reduce taxes with a CD rollover. Okay, so what you do is you find the client's 1040 tax return form, and then maybe you get a piece of paper out and show them this diagram. Okay, so we have excuse me, I don't want to cough in your ear. All right, so we have a bank certificate, which, as you can see at the top, creates a 1099, and that appears on line A of your 1040 tax return. So here's a way for you to show someone a way to help reduce that 1099, or maybe eliminate it in some cases. So how do we do that? We move the funds to we recommend to maybe recommend to move a portion of that to a tax controlled account. All right, so that would be something like a tax deferred annuity, say. So there are other types of accounts other than CDs too. As you can see down there, there's life insurance, SEP plans, IRAs, 401ks, and so on. But a tax deferred annuity would be an answer for that, because it generates no 1099. So again, someone who's perhaps has more money in a certificate than they may need for a short term or any foreseeable use in the near future, maybe has dedicated that to really another retirement account, in essence, because it is guaranteeing the principal, it is guaranteeing a return, but again, it's not a long-term answer for retirement, because in many instances they can do better than that. So the tax deferred annuity, first of all, it takes it off the table for interest that's creating a 1099, and it still offers a guarantee of principal account for retirement. In some instances, a guaranteed rate of return. In others, the potential for returns that are better than what a certificate can offer. Okay, so earning interest, versus paying taxes. What would your clients prefer? So we're going to talk a little about power of triple compounding. Many of you have seen this before, I'm sure. So we're talking about, first of all, the interest on your principal, the interest on your interest, and the interest on money not lost to taxes. So in this example, a pretty aggressive return, 7% with a 33% tax rate, as it says at the bottom of the page here. Again, it's just an example. So in the first bracket we see here, interest-bearing accounts can generate interest on your principal, but if you take the interest, it does not grow. And everyone, I think, understands that. So if you put in $10,000, but you take the interest that's generating off of that, and you spend it or use it somehow at the end of the term, you still have your $10,000. But if you reinvest it and the money grows every year, over time, you can see what that $10,000 will grow to. And then in the third category, if the interest earned on the principal is reinvested and it remains untouched by tax deferred annuity or taxes itself, you can see how that does over time. So again, the power of tax deferral is huge. And that's what many of you and your clients are doing through retirement accounts like 401ks and through IRAs and through non-qualified annuity contracts. And so you understand that money untouched by taxes, not using the interest, allowing it to reinvest and compound and not pay taxes on that, will really help and will really see results in the long haul. Okay, so just talking a little bit here about some ideas for you advisors out there. You all probably utilize a fact finder of some kind. This is a particular section out of a much larger fact find that talks about CDs. So when you're discussing clients' financial holdings, this is an area where you want to make some notes. And I think the maturity date under that, where it says your CDs, maturity date is important information to gather. Again, this helps you with future sales, but I think farther down, what is your goal? What is the goal of the money that you have? Maybe in individual certificates, maybe they're for an upcoming purchase of property or for college funding. Maybe there's a need for some payoff of some loans here. Again, we want to identify that because you don't want to make a recommendation to someone if you know that they can't do something with it, they're not going to be able to make a decision about it. So I think, like any other financial asset, we want to have a discussion about what is that for? What is that earmarked for? Is it just to earn higher interest and for maybe a lack of a retirement vehicle that we know and understand that could work for us? So I think taking some good notes about what the money is used for, and again, if it's dedicated for certain things, and it's not due anytime soon, this won't be a place where you, or this will not be money that you'll be making a sale anytime near future. So, but if you locate something, understand a little more about what they're doing with certificates in the bank. Yeah, I've identified when those are coming due within reason, and you understand what kind of returns there are. And a lot of times your clients will tell you what kind of return. They'll know. They'll know what kind of rates they're getting on those. So um, this can help you identify some future sales like we try to do. We try to X-date our business. So um, if you don't have a fact finder with that, let us know. We have a number of these questionnaires. They're actually in the resource library, but we also have them in our database here that we can send out to you. There's some abbreviated fact finders. There's some that are much more expanded and have all sorts of investment room to put down any type of investment that a client might have. So uh, again, just a summary here before I wrap up. That first point I would like to make is that you want to, as I think what we're trying to do, what I'm trying to do is educate you on uh, how these bank instruments and the basics of annuity work and how they're similar and how they're different. And I think that's a big part of what we do. I try to do this as a sales director here, is that we're trying to educate. We're constantly being educated on the products and how they're changing, and also in what's out in the environment as far as how you're able to prospect. So we're trying to keep pace with that too. But I always feel like my number one goal is that I educate. If I can educate and help agents understand the products and where they fit, um, that that makes a better advisor and makes better recommendations. Um, Secondly, I did want to relay some rates to you. I just went on bankrate.com. If you've not used that website, it's a great website and has some calculators in there. Also, there's information on mortgages and savings banks and CD rates and that. I did check out their rates today, just to give you an idea. Best 3-year CD I could find anywhere, whether online or not, was 2.4 nationwide. I think it searches nationwide, was 2.4. And the best 5-year certificate that I could find was 2.45. Again, these were on 25,000 or more deposits. Most of these are online banks, which your consumers out there are utilizing, but many of our customers may not be yet. So the rates will probably be actually lower. But 2.4 on a 3-year, 2.45 on a 5-year. That's as far out as I went. When you compare that with our best 3-year fixed rate annuity, we currently have 2.5. So the rates are very close. Again, there's, as we mentioned before, there's better liquidity if necessary on annuities. But if they're the equal rate and it's tax deferred, we still have a very good story to tell here. So 3-year 2.5. My best 5-year fixed rate right now is 365 as compared to 245 on a 5-year CD. That again isn't with every carrier, but I do have a carrier that's available in most states as 3.65 guaranteed fixed rate, and we have a multitude of carriers with 5-year rates around 3 or the low 3s. So we do win on rate. Again, for other reasons. So that's a good complement. We don't have to necessarily win, but Mr. Client, doesn't it make sense to earn a little bit more on your retirement savings, not pay taxes on that, but knowing that you could have access to it at any given time? Wouldn't that make sense to maybe reposition some portion of your certificates at the bank? Again, not the dollars that you have earmarked for anything specific, but money that you continue to reinvest year after year after year. I think we can improve that situation. I mean, doesn't that make sense? So again, that's talking about multi-year rates. The other thing to keep in mind is our product line is not limited here to multi-year rate. Again, we're showing fixed rate guarantee products as a comparison, but there are some short-term indexed annuities that you can offer. Great American, for example, has a 3-year. There are several carriers with 5-year and 7-year products. They're very strong, have really good upside potentials, certainly better than what they can earn in a certificate, and with liquidity, terminal illness riders, nursing home liquidity, and even an income rider if you want to throw in a living benefit on top of it. So we don't necessarily have to tie the money up for a real long time. Again, 3 to 7-year index products. We have several good companies with very strong products, and with a fixed declared rate strategy that's in many instances high 1, if not 2%. Again, those are a year-to-year rate, but they offer a fixed bucket allocation that in many instances rivals what they could earn in their certificate now. So again, keep that in mind when you're looking at repositioning dollars into annuities. We can offer very competitive offerings in that. And then I guess my final note is that many IRAs are funded in certificates at the bank. And when I was in the field, both as a securities rep and as an insurance agent, one of the things I targeted a lot of times in my inquiry, my financial inventory for clients was, are you currently holding IRAs in what type of vehicle? And you'd be surprised how many people fund their IRAs in a certificate at the bank. So again, they're buying a short-term vehicle for a long-term goal. So one of the easiest sales is to reposition that money, because we have products that offer competitive returns and with all the benefits, as I mentioned before. So look for those IRAs in the certificate of deposit. It really, to me, doesn't make sense why someone would do that. That's just a general statement. I mean, I'm sure there's some reasons, but to me, it's a lack of looking at other opportunities out there, whether it's mutual funds or annuities or a variable annuity or something else that has more potential for growth, because it's already dedicated as a retirement asset. So with that, I want to thank you for your time this morning. If you have any questions, you can send those over. I will answer those questions after the webinar is over this morning, but I didn't want to take you much longer than that. I do appreciate your time. And again, we appreciate your business. If you're writing business with us here now, and again, if there's any questions, I'll be glad to follow up with you after the webinar. So you all have a great day. Have a great Halloween, and we'll talk to you again.